Welcome back. You're watching Markets at Noon, and the markets are shining in trade this afternoon with Nifty trading about 25,300 level and a good gaining momentum in Bank Nifty as well, trading about 56,800. Good positivity around 300 points of an up move on Nifty, and as we see Bank Nifty also showing signs of around 38 points up move right now. But now let's just shift focus from just talking levels and talk large on fundamentals. Joining with us is Shiv Chanani, Senior Fund Manager, Equity Baroda BNP Paribas Mutual Fund. Shiv, good afternoon. Mansi this side. It's a pleasure talking to you. Thank you so much for giving your time to ET Now. And talking about the domestic markets in particular, it feels as if the Indian markets have made peace with the global uncertainties, and one thing is for sure that the Indian markets has its own style of trading and investing and showing levels no matter what the global setup be like. As it feels that the Indian markets have decided, let's not cough at every sneeze of the US and let's not bend at every stick of the crude. What's your take on the texture of the domestic markets at present?
Hi, good afternoon, Mansi. Uh, yeah, I think you kind of summarized it pretty well, the way the Indian market have been behaving. And I think, it's a great sign of how the market is behaving in a far more mature manner as compared to what we have seen earlier. And I think it's a combination of a few things. If you think about the texture of the market now compared to, let's say, maybe 5 or 10 years ago, clearly there is a far higher salience of the domestic players. And I'm not just talking about the institutional players here. I'm more talking about, a set of other domestic players as well. And to that extent, I think clearly we have seen a far lower volatility in the market compared to what we have seen earlier, let's say 5 to 10 years ago. And I think that that's certainly a very good sign from a market point of view and market participants as well. Like you said, that we are not coughing and sneezing at every small, not a small, but every event that takes place globally. So clearly, it's a very good sign for the Indian market and certainly for Indian investors.
Hi Shiv, afternoon. This is Shrishti also joining in. Indeed, is a good time for the investors, but where should they really look at? Because the valuations have been a bit of a concern, given the up move, especially from the March and April lows. Give us some sense. Where are you finding value at this point in time? Any pocket which, for now, seems to be fairly valued at this moment?
Sure. So when you think about an aggregate valuation perspective, uh, we have pretty much been flat for last 9 months, right? We peaked out somewhere in September last year. And since then, we have been sort of moving in a fairly range bound kind of a market. Uh, and of course, there have been accretion to earnings in the same period of time. So when you think about an aggregate valuations, clearly the aggregate valuations have actually come off compared to, let's say, what they were 9 months ago. And when we talk about the pockets that we like, clearly at this point of time, what we like is more of domestic plays compared to the global plays. Certainly, given the fact that there is a far higher uncertainty from a global perspective, and on a relative basis, the domestic plays look a little better placed. Particularly if you think about consumption as a basket, there is an expectation that the impact of lower taxation should start to flow into discretionary consumption, as well as when you look at the monsoons. I mean, of course, we will know the final picture only maybe 2 months later, but at least at this point of time, it looks to be positive from a monsoon point of view as well, and which should bode well again for the rural consumption part of it. The other theme that we continue to like is pharma and healthcare, where we believe that both the international as well as the domestic part, on the formulation side, as well as when we think about healthcare as a industry, I mean, that just seems to be going from strength to strength. So clearly, those are the pockets which we are positive on. Other than that, of course, from a capital goods, power utilities, we are a little more bottom up approach at this point of time. because we believe that these are a bit of a nuanced sectors. So one need to sort of pick and choose there.
Pharma, healthcare, diagnostic, defensive is the space which is on the radar from Shiv Chanani, and at the same time, the seasonality factor will also play considering the onset of the monsoon. Shiv, one more thing. The short-term volatility is ought to persist. That we understand. I hear you there. But India's medium-term growth remains intact. And while the market participants also understand this, they are trying to create and draw a portfolio. If you can help us understand what is the equity investment philosophy of your fund house and how should one consider drawing their portfolio?
So I think, when an investor is looking to create their own portfolio, I think the most important thing that they should take into account is what is their investment objective and what is their investment horizon. And the third part, which is the what is their risk appetite. So I think, the portfolio has to be constructed in accordance with these two or three variables. So if there is, let's say, a young person, on the lower than 30 years of age, clearly they should have a longer time horizon, which should mean that, they should have a higher component of something like a small and mid caps, given the fact that the risk appetite is likely to be higher. Whereas, if somebody has got certain objectives, in terms of the milestones coming from 2 to 3 year perspective, I think the portfolio has to be constructed accordingly. So I think what's most important is, as I said again, it's the time horizon and the risk appetite of the investor is what they should look for.
Shiv, thank you so much for taking the time out and speaking with us. Really appreciate that.
Thank you so much.